Weekly stock market update, you gorgeous people. So where are we? Well, still expensive is all the things in red. That doesn't mean the stock prices won't go up. What it means is valuation itself is not the only thing to look at. Why is that expensive? You're paying $30 for every future dollar in expected, not guaranteed, profits in Microsoft, but you're only paying 11 in ExxonMobil. Why not just buy ExxonMobil then? Well, that'd be idiotic, because then you'd only be looking at one thing, valuation alone. And we know that growth is important as well. So a dividend yield, so it's cash flow growth. That's why we look at the whole shebang and not just one thing. However, all things being equal, if we had a lot of tech companies in our portfolio, we might want to spread into finance, healthcare, if they tick the other boxes, energy and communications. And I'll talk about all of those in just a second. So how do things look? We're going to cover the S&P, the NASDAQ, Microsoft in this, Apple, Nvidia. Look at that, shoot up. Meta we're going to cover. Also, like Nvidia, what do you do when a stock is going vertical, or Bitcoin, for instance? Google will cover as well. Now, like I said, very important when you're creating a pension portfolio or any kind of investment portfolio, and don't just take my word for it, in my 18 books on investing, we want to tick valuation. We want them to be undervalued. In other words, the share price compared to profitability. We want growth in profits and in sales. We want dividend yields, because whilst they don't guarantee a higher share price going forward, they do often lead to one. Okay, and valuation is twice as important as growth, which is twice as important as dividend yields. We want croaky cash return on capital invested amongst the companies, and we want to look at 10,000 to be in the top 25% by all companies, because that, according to research from Goldman Sachs Wealth Management, gives you 30% return on average. Not every stock and not every year, on average amongst those companies. Want some momentum? That's from the hedge fund industry. So is Sortino and Alpha, and we need those green. So we need stocks which are green across all 5 boxes out of 10,000. We want about 20 stocks. So what's been doing well at the moment? Well, we continue our holdings in Nvidia, and I'll come to that and the specific strategy in a second. Meta, Costco as well. Apple, as you know, I said on Wednesday I got rid of half the position on that, and I'm going to talk about some of these others. Tesla, as you know, we got out of in October. Well, why did we get out of that, and yet it's been falling since? Did we know something about electric cars? No, absolutely nothing. So I'll tell you how we make those kinds of decisions. Exchange traded funds, well, obviously everyone's getting a bit excited about Bitcoin. I'll do a separate video on ETFs, and specifically on those ETFs which cover crypto. So how's the year to date so far? The NASDAQ is up 8.75%. So if your pension is doing better than that and better than the S&P, well done. If it's not doing as well, you've got problems. The UK market's up 1%. That's incredible. It's not normally up in the first 2 months of the year. Amazing. Of course, the NASDAQ's done 8 times better, but don't you worry your pretty little head about that. So where are we in terms of what's moving the markets higher? Well, communications, technology, financials, and healthcare. And as I said, those are the ones I already said, those will be the ones which we will actually focus on. Now, not because when the horse race started in January, we knew which horses would win. Not that. It's just that when we look at the data bottom up for companies, they're falling into those 4 categories a lot. Okay. And they're doing well. Well, no wonder, because we're picking undervalued companies. Somebody once asked me, so how does your process of picking undervalued companies that are growing and producing dividend yields with strong cash flows, high average returns with low volatilities to the downside, and outperforming the market, how's that working out for you then? Left him unconscious. So momentum is one of the most driving factors. It's up 11%. Again, we didn't know which of these factors would be the most important. And when you look at momentum, for instance, or growth, as you can see here, it is not because we try and guess which factors are important, growth or momentum. It's because we tick all of the boxes. So a company has to tick value, growth, income, momentum, okay, boxes. And the reason that you then end up winning is, well, look, we picked momentum. Oh, yeah, but Alpesh, growth has done what? Well, we picked growth as well. they have to tick every single box. And that means that the ones which only tick one box, like these, they won't meet our criteria. The ones which are doing well and tick all our boxes, like that or this or that, will already be in. And that's the only logical, rational way to win in the markets. Tick all the boxes. Nasdaq's up 48% over the past 1 year, so your pension should be up 50%, or at least your pension should be up 27%. If it isn't, it probably means you're in UK stocks, in a UK workplace pension, and so you're probably settling with 1/10 of what I get each year. So my pension goes up 10 times more than yours does in a year. It's not me. It's just the markets. Sorry, your IFA is ripping you off and is probably an idiot. Remember, to qualify as an IFA, you don't need a degree. You sit a 2-hour multiple choice exam. Say that again. 2-hour multiple choice exam. Then you're an IFA. Well done. Okay, Nvidia. So which ones are in the top 10? Nvidia, we got a bit of that. Advanced Micro, nice. Charles River got a bit of that. IQVIA got, and Qualcomm got. So we've got quite a few which are in here. We got them before they were in here, by the way, which is nice. What have I missed? Didn't get Constellation Energy, didn't get Kroger, Ralph Lauren, completely missed. Diamondback Energy. I don't know if that's in the last month's approved filtered list. Somebody will tell me. Bottom, ugh. Okay, just shows you everything doesn't go up, but these are the worst stocks in the S&P 500. In the FTSE 350, the 350 largest British companies, these are the ones which have done well recently. I've got nothing to comment on those. And the ones which have done awfully, like St. James's Place. And if it was down to me, I'd shut the whole company down. Absolutely just shut it all down. Right, now, where are we on the S&P 500? That is still going in that direction. And I expect that to continue. Now, the important thing with this is, in that direction is, despite that, you can have a couple of weeks where the market falls. So it can rise, but have falling weeks, even 3 weeks. So don't panic. Nothing to panic about at the moment. FTSE 100 is 7% up since 1999. So since the last millennium, it's up now 7%. Well done, British companies. Okay, and I said in my first column in the Financial Times, as I've told you before, in the first paragraph, I'm selling all my UK holdings and only buying US ones. Now, which makes my life a lot easier. So that's where we are with that, and I can, for now, expect that to continue up. But don't forget, you can have down months. Look at that. That's a down month. So you can have multiple weeks where the market's down. Apple, as you know, I already said, we've got rid of half our position because that's a double top. Chances are it'll probably go down to there. You might say, and by the way, it's really because of this. The MACD, the blue line, crossed below its own moving average. So you might say, no, I'm going to keep hold of it. And I will. I expect to buy Apple some point in the future again. But I sold half because I just wanted to, that once the blue line crosses the yellow, I don't really want to be holding a stock. So why did I not sell all of it? Well, because I'm still hoping that with the other half, that will bounce up. But it might not. If it goes lower and down here, I might get rid of the other half and just get back in when it settles here. And I expect it'll settle down there at some point. Okay, so that's Apple. Alphabet is for Great Investments Program only. If you've not looked at that, have a look at alpeshpatel.com/links. Microsoft, I continue holding. Would I buy more right now? Yeah, okay. But, are you comfortable with just that much of a rise before it's potentially going to fall? So at the moment, I continue holding what we've got, which has seen it gain 100% return since January of last year. And the MACD is getting a bit overbought. Remember, if it's at this top end near here, then like this, that's the worry. You get toppy and you drop off. So you get this rise. When that happens, that's an advance warning. So just be careful. Amazon, Great Investments Program only. Disney, it's one of those where I would actually still buy more. I've got my holdings and that's fine. I'm not selling anything. They're all excited. But don't forget, this is one where it ticked all the green boxes, value, growth, income. So we're not just looking at charts. We've already ticked all the other boxes. I've got more in part 2. Don't forget, on YouTube, you can see why you should sack your pension fund manager. And in part 2, I'll discuss Nvidia and some shocking information.